All right, so let's look at the market in a wider perspective. And so as a day trader, okay, so this is Bitcoin, for instance, obviously it's an uptrend. Now, but there's something significant you must look at. I'm not going to go into those details so much, but even if you take from here, for instance, to take up to say, okay, let's look at the up. Now, the market have done a very much massive activities. Then this is where mistake come. There, here, 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 here. So that up there, can push it later. And then, this is the last low. So this is the last low. So that means this is broken. So let's see what's going to happen. Let me just stop here. So you can invariably see now that the market has created something called double top, even if it's not perfect. All right. So you can see it has created something called double top. Here to be the neckline. Okay. So but let's take off this. The daily time frame. Either it's a double top or not. This is a breakup structure and sweep of liquidity. Then we have here. So now you are trading. So the first thing you need to see is to what's the trend. It's an uptrend on daily time frame. It's an uptrend. Even if you start from here, it's an uptrend. But there's something significant that we didn't know is that this market have a broader view of seeing it. Right? If you don't take it, squeeze it to see it to bigger. So this market is still an uptrend. Yeah. So because this is this. Right. Yeah. So here was higher than this. So we got this. So that means in all aspects, you're looking at, okay, in all aspects, this is a low. All right. So all of these are pivot point. All right. So now this is a high, this is a low, and this is a high. This is a low, and this is a high. Right. Now we broke this. So then what we need to look at, area of interest now, a point of interest. So that means on a higher time frame, there's a market structure shift because the structure was broken and then came down, or not to be. Now we'll have seen sweep of liquidity if you are rally up, but it broke, then came up a little and stepped down. So here we have. So here is like kind of a break of structure. So if we are going to have a rejection at this point, but there's something we now look at. To what extent can this market travel back up, which you are going to look at. Where is likely this market to push back down, or will it continue up? Then you are going to be looking at some areas where the market has jumped away, which is here, without due process. So is it likely we'll come back here? Possibly. Right? So because here, so that means this is a high, this is a low, this is a high, right? And then this low, did it break it? I don't know if this low had broken this, that means this is another high. But if it does not, that means this is a recent low. So recent low that we have not gotten a clearer direction about it. You can see when I talk about support and resistance strategy on a hybrid level. So take this. So to what extent can this market travel back? We are looking at different areas that are rejected at this imbalance or return back here. But because this is able come to sweep this internal liquidity, there's an internal liquidity here, will come to sweep it. It's another area you can look at. So that means I have to take note of it to look at this internal liquidity where the market could travel back to. Okay, so this is on the daily time frame. I've marked some key levels on daily time frame and all of that. Step down to 4 hours to refine the market properly and be able to see where the buyers, you're already saying temporarily the market is a downtrend. If you look at it on 4 hours, it's absolutely yes, right? Get traveling or before you have this, then a low here, and this is the last high. And then this one continue to create its own structure now. Have this, then we'll have this, this, right? Then we have this. Then it took out this. Then we have this high. We have another low. Yeah, so then we have another high. Okay, and then this is the new low. So on 4 hours, it's a downtrend, right? So this is a low and this is a high. So this is a low. A new high has not been created because we're steadily dialing here, except we take out this. So if we sweep this liquidity or come to grab all of this, can we see sell down? Why not? Because in the higher time frame, it's a bear market. Okay. So what do I do ordinarily? So you can catch in some buys because you have been able to identify some key levels. Okay. So here we have, well, on 1 hour, you are seeing a return that looks like a pullback of daily time frame. Okay. So on 4 hours too, you probably could find other imbalance as it were. So that means you can have an imbalance here. Label it or FEG. Or HFEG. Okay, so that's another area will totally sweep the liquidity. Okay, then yeah, sometimes you draw your trend line, find some kind of it's good too. But I'm just change this. Let's go to 1 hour. So 1 hour, what do you still have? In 1 hour, still a downtrend. You're right, sir. Still a downtrend. The high, the low that took out this, the high, the low is a high. Now, this is an internal. So this is a low, this is a high. Here, this is now a low, this is a high. Okay, all of this now a low. Temporarily, you are still struggling to have a high. Okay, so let's go 1 hour time frame. So whatever thing you must have been doing here will have been scalping, not proper trading, because it's an undefined kind of movement market must have been doing. So, but even when you are on a lower time frame and finding a trade, you are conscious of the fact that the market is on a downtrend. If not, you come to 30 minutes, you tell yourself the market is an uptrend. So I'm just a wider perspective, right? So taking such trade will have been scalping all the way, but still conscious. So that all these places you mark, when the market start reacting, then you know why they are reacting. Then you can do the needful. Why? So that is if the market return back to this point and then start shifting market structure, then you now know, oh, there's an area of importance there that the market is actually respecting. You get it? Okay, so that's why sometimes you have to wait for a proper trade setup. Not that you jumped into the market and you want to find a trade. It can be very deteriorating. You'll be weakening your account like that. Let's go to the synthetic. Here is the synthetic. So let's take an instrument. 75 have been rocking down. 24 hours, which is a day. So if you look at this now, this is fascinating. That's come to a very serious point. So which I'll mark, can we have a reversal from here? So obviously now what has happened? It has broken it. So probably it's a high, it's the last high. So but working with this now, high, low, a high, a low, a high, a low, a high. Okay, it's a low. Yeah, the new low was created here. Okay, so that means altogether, this is the new low. There's a high here. And then up to now, we've not gotten any low. So the market is just truncating. You see that it has broken this, probably to retest. Retest this, reject this point. That means it's still going to continue selling. So sometimes there are analysis you don't waste too much time to stay with, because obviously they're not going to give you a trade opportunity. So let's just scout through. Take this. Okay, so here, here, so here is actually not trending, not this thing. So what you want to do is to look at some of those liquidity area and mark them out. You get it? Some of those liquidity area, you mark them out, like here and here. So what you want is that you want to believe that if this is swept or here, you want to have a reversal. And once that is not done, you don't jump at this market. Or where are you following into? Okay, let's go. So clearly, this is a downtrend. This is similar to V75. Can you see? This is similar to the case of V75, but this is a good thing. This one is still just on top of it. That's not broken it. So you want to go to 4 hours. You want to see the reaction of the market there. No doubt it's a double top. So you see a lot of pattern playing out here. Double bottom, a double top. But of course, I don't wait for the neckline to be broken. It's a waste of time. Okay. So are we likely going to have a bounce? That is not defined yet. This is not defined yet. We'll come back later to check. Okay, it's another instrument. You can see taking from here, a low, a high, a low, a high, a low, a high, a low. Then think this is a high and create another low here. Unfortunately, we have broken this. Okay. So here you have a low and a high, recent low. So let's do something. Let's just use this like this was the previous high that gave it to this low. Okay. So this is here. And then this is a high and a recent high. Then of course we have a recent low here. So what will happen? Probably you're waiting for the market to come and sweep this liquidity. Oh, beg your pardon. I wanted to look at the market first in the daily time frame. Okay. Okay, so let's even work by that 1 hour. So save myself loads of stress. It's a period point. So this is a high that was taken, and that's break of structure. From the look of things like a sweep of liquidity, then you're looking at this low that produces this high. So what you want now is to let the market come, sweep this liquidity by turn here, and then return to fill any gap left. That means we're looking for a sell. Okay. It just is simple strategy for you to follow. You don't struggle. And I always tell people when you see a market, you cannot tell where it's going to at a glance, then it's not your market. Okay, so I told us this one. You want it to come and reject here, then you sell. Okay. Okay, so look at this. This will be selling. And let me tell you why. Let me tell you why. I'll have this rejection, sell down. And then the third rejection, taken in this perspective. So these are liquidity, liquidity, liquidity. Yeah, this is a rejection. And then if you're selling, we're at the close of this candle. If not, you ought to be in here. And you see that the market, let's see, you went to a close here. Your stop loss to be above. Okay, so here we go. This one ratio, because the time of entry, this is, or sometime you want to refine that into 5 minutes to find more of a sniper entry. You'll see now this form a double dot top in 5 minutes. This will have been this and a sweep. This is sweep. So here also just wanted to return a sweep, made an attempt, failed. So that this sweep engulfing can do. So you will have seen that entry will have been more refined. Here. So that will have formed an entry here. Right? So that will have been an entry, a more perfect entry as it were. So I think on daily or 1 hour, we'll look at this then what you want to have. Yeah, better still, you have this. Okay, it's a high. Give back to this low, even though another high was created here. And so you want this to be taken out and pull back before you form an entry. That's a simple thing. Ooh, look at this. Okay, I think there's a perspective too we're drawing here. All right, so I think that's just the basic. So let's go back to the still rallying up. Want it to rally up much as possible. Okay. If it was scalper, you will have been scalping 5 minutes, so you are conscious. Because early on the forex market, you have been scalping on forex market, not on futures anyway. For future need allowance to breathe. So let's look at the well trade aspect. This market is not loose in proper order. Okay, so you have to be steadfast. And this is light 9. So you can imagine what will be your experience trading at this kind of instrument. It's on the June. In the month of June, you take it from here, or even here. Mom, can you see? From June up to now, has not done any massive this thing. So this is where we have problem. I will now tell people this kind of trade, how do you trade it? So you only create a range, say side by side liquidity, then you will have been able to be finding trade. Taking out the highest here, taking out the lowest here, begin to refine other point of interest. For instance, with the highest here, and this will be the lowest here. So you begin to get other points. Okay, and just create a slot as a cluster over again. This one, these are liquidity, these are liquidity. Get them swept. Yeah, to sweep this, it could not for traveling down. So we're going to lesser time frame, 4 hours. You see those points we mark and those rejections. So we'll look at the current prevailing situation. Imagine you are now looking at a very perfect structure. You're wasting your time. So we can expand this and it now give you a structure inside the box. You can imagine that, right? So now, let's go this way. So that means you are now creating a structure here to see a high, a low, a high, a low, a high, a low, a high, in that squeeze. See where you are, prevailing situation of such market. So you have to now work with this. But you are conscious when you get out of this point, either up and down, you want to be aware that something is about to happen. So you can imagine this. And that's what I'll talk about when you're trading these guys. You have to go to a lower time frame. Yeah, so but sometimes they actually get up to do what is ideal anyway. So you can see all this why. So look at 80. Okay. Let's check the reef we're doing. Okay, maybe I'll see what's coming up here. All right, so say 20, gold 20. So it's the same thing you do here. Because what do you say now? Where do you say this market is going to? Is it a downtrend or uptrend? Obviously, it's a downtrend, even though you have this previous low. Look at it. So that means the market actually traveled here. Then high, a low, this is the main low. This is a high, this is the new high. A low, this is the new high. This is a low, and so it's an uptrend, it's a downtrend. So you're looking at, okay, what will the market do this time around? Will it come to sweep liquidity all over here and sell off to this liquidity down here? Okay, wait a moment. So can I find a trade now? Maybe no. So because you're looking at two major liquidity area here and the other one here. So this market travel there. Let's look at the 4 hours. You can see in 4 hours actually created kind of structure. A high, a low, a high. So that means this is an internal structure. This is the moon high, and this is a low. So just creating a segment, and then when you narrow down what you are doing per time. So after narrowing down to 4 hours, you will find a structure. So ignoring this other previous one here. So that means you can find a structure here. I get it now. You can find a structure from here, right? Find a structure here. A low, this is a high, a new low, a high, a low, a high, a low, okay, high, a high, a low, okay. You are now conscious of this point here, of the area that market could actually react to. All right, so let's look at 60 or 40. Let's go to daily. This one was obviously a downtrend, so no struggle. We had a double top there, or rejection as the case may be. And then you have a low and a high, a low, a high, a low, a high. Now this is a low, this is a high, a low, a high, a low, a high. We have a low now. So where will it actually travel to? You will mark this now, being more or less like a key level. Okay. So now let's look at something here. This market actually going to react from here. So you go to a lower time frame. Let's look at 4 hours. Okay, that's V2 of this is 4 hours. To really get it right, you probably want to go down to 1 hour. Okay, let's go to 15 minutes. And the refining is 5 minutes. Okay, so I think so any structure you cannot lay hands on, just avoid it and look for another structure. 60. Okay. So that's what it is. The market will always do and behave as it's supposed. This week I will take personal responsibility. This trade has been humiliating and frustrating us since. Yes. So if you look at this trade now, ought to have been taken here, but we're waiting for proper verification. And sometimes when you are waiting for verification, it's not coming. Or a trade that are giving you some kind of, you can take small entry and allow it to run while looking for more position later. See the nonsense? See the nonsense that's been doing? So this is not a thing you just because it's not really gripping what's supposed to be gripping. And then you can't just jump into the market without doing proper evaluation. And those are the issues. Okay. So let's look at a few instruments. Look at those flips. Fantastic. In the flips. So let's look at it on daily time frame. You are a day trader, so you must understand what the day is preaching. If you are here and you mark the high here, we'll have been able to find a sell when the market came back to this point. Since June. Best approach to this market is always a scalping. Yeah, so let's look at it. Some key areas or levels. So he didn't get down here. So you have a high, a low, 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 high, a low, a high, a low, a high. So we now have a kind of pattern being formed here. So, but this is the recent high. So let's look at it. The recent high by the external structure and the recent low. So this need to take out this or break and continue. So whatever thing is doing here now, but it has not. These are external liquidity. So let's go to 4 hours. So in 4 hours, you could see that another thing is already brewing before getting to this point. Which means you have a low here. Is it both? Yeah, I think this is a low here. At the end of the equal side, I think one is bigger than one. So here, below here. So this is taking out this, returning back here, which was a very nice one. An imbalance was swept. Right. That was that entry. Then we are in following up. But you still know that this has not really created an uptrend per se, trying to reverse. So the same thing on 1 hour. Okay. I think this was more than this. So the same thing, we mark here. Come down, you want to break it. Broke it. Waiting for an area. So that's how you refine to as low as 1 minute or so. So what am I to do here now? Nothing. But you're looking at the market to come up here. Probably to break a retest for you to buy or reject, and you are selling for the next break of structure. funny market. Okay, you look at gain and pains. So that long. Ordinarily, if this is a drift, with this you should be catching heavy market. So we have been looking at something like this. Is the lowest. So also broken this and a retest down to this point. It's a nice one. This will have given enough momentum for you. A moment. See this stupid trade. I wanted to even have the positions and I forgot. So I think this is very good from a structure already. Yeah, this is a low, high, low, high, low, high, low, high. So this high has broken this. Okay. I think it should be continue buying. Yeah, that's what it means. It should continue buying. This is daily now. This was yesterday candle. Oh, bullish. This one started today. So continue buying. So probably you want to look at this is a recent high. High, low, high. So let's believe that another low is already been formed. So let's look at it here. So from here to here, let's see how much you can make. Go to 4 hours. Go to 4 hours. Okay. So here we have this. So I mostly do these guys with when it's a lower time frame with a kind of structure. And I think 5 minutes. You already know this point. You see the 5 minutes. So here is how I trade this pain and gain kind of a thing. Here the market come down here. So I mark both. Let me just use my box to mark marking both here and here. Do you understand? So what exactly was I looking for? Looking for a sweep and a break. You understand? So there's a need to cross above. So that means since this one refuses, this one, it broke it, come back here, and couldn't give us what we want. It's off. This is a new one. This is a new one. Right? You understand? It's a new one. Now, this is failed. Yes, which makes sense. Or now, immediately the market break above this point and buy. Now, one thing is that when you are trading pain and gain, boom and crash and derive. So this is a break. So chances are there that this break happen and you are buying here or just a little here. Your stop loss has to be below this point. Yes. I think one of the advantage of the pain and gain on on this guy's that you can use 0.01. Am I correct? Or 0.1? I think it's 0.1. Let me even check. Right, so here you go. Let me check. Yeah, I think it's 0.1. Maybe 0.1. That's 10 cents. I think so. That's 10 cents. So 10 cents. So your stop loss has to be below this point. Now, so you have to allow it run. So 10 cents. If it's 1:2 risk reward, sometimes you are not quick to exit or you target the much high here. This is a double top, the collapse. So here you're targeting this high, perhaps. All right. That's about 1:2.5. That's about 181. So your stop loss is 71, or let's say 70. So 71 multiplied by 0.1. That's just about $7. Just $7. Yeah. If you hit your stop loss. But just make sure that your stop loss is just below the immediate low, right? The low that you mark. Okay. So as far as it has not broken this, your point is still valid. That the market, now of course, when the market now come back here and start spiking again, you can load more, can add more. Suddenly come back here, like now created like at the double bottom. So here you can load more, here you can load more, and this spike too can make you add more. You can see why you need concentration. Now here it has given you your profit turning down, but this is a high, broke it, return back to it. So this high, market, right? The market now come back, broke, couldn't cross it again, coming down. So every bit of it again you are marking. Bam, bam. You get it? Bam, bam. Broke it, didn't come back. Bam, bam. It broke it. Good. This is another one. Bam, bam. It broke it. You squeeze, that is liquidity sweep, and broke it. Chances are there that you're entering this trade. Yes, because you have a rule. The chances are there that you enter this trade from here. And we said, okay, this was the sweep. Below. So chances are here that you will be stopped out of this trade. Except if you have a law. You have a law and said, I want to be using 70 pips. Or like what BEKENET give, 80 pips. BEKENET give 80 pips in each of their trades. So to look at this now, that is 80 points. That is $8 if you use one position. Okay, so 1:2 risk reward. Of course, you have to be careful at this point because of you are having a point of interest. If not, your target will be here. Look at it here. That will be 1:3 point something. Then the market return back here. Now, if when the market start pushing, when the market start pushing, you are now adding positions, and see that your concentration has to be on that trade. And that's what it is. So now, come back here. This already a market that's going to come down. 1, 2, 3. None has closed it, but now need to close below here. Maybe you come and get a bounce here. I don't trade against the spike when it has to do with boom and crash or pain and gain. Okay, so the same thing on, I think I prefer this 1,200 and 800. Okay, this guy was trying my intelligence. Just delete dialing. Okay, so let's go over it. They'll have a tool too that can help you. You know that this one is a downtrend, very pure downtrend, right? Because even when you mark here, this one, this point, rejection, that liquidity squeeze, eventually scoop this, travel down. You expect to now bounce here, no way. So chances are there that you must have recorded some losses here. And this guy see continue on low, high, low, high, low, high. Now another low, nice creating. So you don't have opportunity to buy. Only people can take so much risk. So I don't have energy for so much risk. I don't know have all the time it takes to sit down and chart. Even if you lose, you're able to recover because you have time. You don't have that luxury of time. Once any setup is not giving me what I want, it's out of my game. I think we're checking something. Okay, this guy, so wanted to cross over here. But sniper entry traders will have traded it. They know what they are doing. But I don't have that freaky time too. My word. It's Mr. Dumb. So imagine you come to a lower time frame, you think that these are not trend. You just go and rock pull yourself. That's one of the things. Before you go down to lower time frame, you have to look at your higher time frame. So look at this here. So you will have found a trade here. I hope you know. But yet you are conscious that okay, this market may start doing his misbehavior when you get to a proper point. Because why? You have refined here. So your 5 minutes will have cost you some money. Okay. Move, right? Scoop the liquidity, come over. Now we have an imbalance for here to here to this point. So you run into it. Perhaps you've taken any trade because we do this. Don't worry. Just remove everything. It's still the same. You can just remove, leave only this. See, oh, so perhaps let's keep the label. I think we need the label. Right or left? Right. Put it in the right. Okay. Okay. Excuse me. So you remember your entry. So we have this here 3.123. Right. So having done that, you're waiting for the market. Trading is mechanical. Okay. So that means this one, this one. So let's run it. Of course, your stop loss below here. How many points is this? 927 points. This you can use nano lot size. So let's go here. Already 1:2 point something. So if you're targeting 1:2, this will be here. So if you use 0.1, yeah, if you use, no, that's 0.01. 0.01 is rather big. For 0.01, you're now saying 9 what? 927 multiplied by 0.01. Oh, that's not too bad. That's $9 as your stop loss. Then you have 1,800. 1,851 divided by 0.01. That's $18, right? You use 0.1, so that means you want to kill yourself. 927 multiplied by 0.1. That's $92. You want it? So you can say, okay, instead of that, use 0.0, 0.05. That's $46 your stop loss. So depend on what you want. 0.02, that's $18. 0.02 is not a bad deal. Or, of course, you do see it too. 0.01. All right. So the nano allow you to use 0.001. So for a beginner, you can use 0.005. 0.005. That would be $4. Yes. Or 0.008. That would be $7. You get it? So you can do 0.005 in 4 places. That makes sense. Yeah, I think so. Okay. So now if you do that, the market actually gets and give you the money, you're good to go. And then here you come. Market again. No, you are careful ordinarily because you know that this is still a downtrend. This is a rejection point, but you have taken some money here. Make sense? Blah, 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 blah. Make a lot of sense. So here is this. Getting off this guy. Moving on with this guy. Okay? So that's done this. Now, this is another massive pullback. As if it has rejected. So you are careful. If he has given you your money, your entry is not as important as your exit. It's not enough to have an entry. It is important to have an exit. Very over important. So that's how it is. You have an entry, you must have an exit. If not, your work will be a waste. See this nonsense instrument that have messed my time. Just abandon it. You make them to charge me swap fee now. You make them to charge me swap fee. This is a waste of time. Market of how many days? This is why I don't take up years. There are some pairs that are not just for me at all. All right, so there's another style you use in trading. All of these, I've given it to us, scalping. So I have a formula. So scalping, formula 2, formula 3. Not 15 minutes at all. It's 1 minute, 3 minutes. But fortunately, this one's even was doing. So it's scalping. So 1 minute, 3 minutes, you will have gotten enough trade as much as you want. But that's to tell you that even this 60 trend so massively yesterday or 3 days ago, massive trending. 3 minutes. Hmm. Hmm. So sometimes if you are a patient trader, when you lay hand on this tool, sit down with it, maybe 1 or 2 trade you take. If I have not watched my Formula 1, Formula 2, I think there's a need for you to go and watch it. Okay. So if we go to 2 minutes, you can choose any time you want. Especially when you see that instrument is reacting more at so time frame. Because sometimes if you choose too short time, the market may be too dirty. So I love smooth running. So 1 minute too. So that means you're going to be walking hand in hand with your red line. So like 1 minute now, that means this one is getting set gradually. Okay. This scalping. Let's look at 180 and 1,200 gains. I told us about the movement. So gains, I don't go 1 minute, is 5 minutes. Remember what I said here, that this automatically, the market is, you understand? The market is what? Plumbing back, maybe major one. So with these two, you already know your honors, you know your style you're using to trade the pain and gains. So this already give you an edge that, okay, it's a bounce. You understand? So I think I prefer to trade the other ones, 600, 400, but I don't think I gbadun their own style. I think they are slow for my liking. But with this style too, I think you can achieve a lot. That means you can use this to 5 minutes on it. So anyone who, that's called, let me trade. I don't, yeah. So even if you now do our style here, it's just to complement, right? Because here you have done this. You remember? Yes, I think you remember. Okay. Come down, failed rally, break, you broke it. That means at close of this candle is your entry. Your stop loss is below this low. So this your stop loss is a bit bogus. Your take profit, if it's 1 ratio, 2 risk reward, but here you're supposed to be targeting here. That's 2.5. Yeah. This is simple if you can obey those rules. So let's look at 400. I don't have time for all these guys. But I think if you are meticulous enough, you may not find trade all the time. Think Okay, so this is midnight or something. This is a double bottom, but you know yourself. And so you can see that this one is a little bit squeezed somehow. And so that's why you're not getting that 1, 2 on 800. So you have to take this now here. So, but ordinarily, if you just mark only this one, you may not get what you're looking for because you look at it here. Although, may still give you what you're looking for, though, but you have to mark a swing, a complete swing, because these ones are not creating good swing. So this is now what you want, the market, right, move up. You want it to return back here, that to sweep the liquidity or just bounce like what it did, double bottom. And once it sweep, right, then the previous swing was here. So that means you want the market to travel back over here. Okay? Now, some persons are smart. Once it drop to this point and bounce or sweep liquidity and bounce, it's risky. They take small entry. That will reduce their own stop loss. But for me, conservatively, to be safe, until you take out this. So once you take out this, I don't care how it's going to travel to. So that means your entry will be here. So your stop loss will be bogus though, no problem. So if you can now see, they never come back to that stop loss. Then here you have. So in this case, because you have these tools now, in this case, you probably will not close trade like that. And I will tell you how. Now you have entered here. Your stop loss is a bit bogus. 150 something point. That would be $15. Right? So what you're doing, is spike, spike, spike. What you're only doing is you won't close the trade. Look at it. The trade is already giving you how many risk reward? 3, 1:3. You won't close the trade until and if you observe this. When the market break below this, number one. Number two, the market have created a high here. It still broke the high. Makes sense. Right? Makes sense. He created a high here, create a low. He didn't break this low, no problem. Break this, makes sense. It's still price action. You're only keeping an edge. Now, this is a high, this is a low. So what happened? This low, this low. So here we have this. This low is broken. The moment this low is broken, you should be out of the market. This low was broken. They can now see now align with this because after this low was broken, a spike failed. This is the highest. Anything that didn't make this one get out, you are out of the market. It's better you out, take your profits and targeting, another entry. Here you come. Now, you will have used these two together, but it's good you take the profit you have made. Here you come. The market has come over here, and now it's rolling. I don't short spike. I wait. So that means you will have been doing your career here. Chances are here that you're going to lose trade here. Look at it. Because although since you are still focusing on your profit target, you're out and you're watching. The market spook up, didn't get here, drop, no problem. So chances are there, you're already marking here. Why will I mark here? So because you see that you are still above this line. But let's go up. The market continue to drill die, and all of that. Another confidence you can now create is this. Market return back here. Patience is required anyway. Return back here. Chances are there that you will not enter here because you are looking, will it not fail? Then we have a very massive pole. And then that scoop out all of this and you're above this. Maybe conservatively, you want to go above this low, that line you draw here. So that make you to wait for the market again to buy. Right? But again, market was going, this is a high and a double top. So market, this is a low, this low is broken by this, you are off again. So finally, you see the market, oh my God, the market start dropping. Okay, so you can't do anything now. It's already telling you I'm going down. So if you go to a higher time frame, you probably will be able to see where is it likely going to go to. So probably if you see your daily or 1 hour or so, you can now really know because the market ordinarily is a downtrend. Yes, It is. Is it? Okay, let's look at it. So you can see now that this guy, where it has gotten up here, is really rolling down, maybe to come back to this point. So you have to be very careful. And what has happened? They have swept liquidity over here, and now sell it down. So you still draw into this guy's useless. It's pushing back up again. Trading useless pairs is not good. Just draw your, and maybe when you get angry, exit them, and then you'll start doing some massive stuff. Funny enough. Okay? So that's what it is, and that's how you trade on this instrument. Okay? You want to trade with us, then just connect with us on number +23490470994704499. 470449998. Take the number again, +2349047044998. Thank you. My name is Mida Jimo. I'm the team leader of Planbxpr. Have a nice time. Go to the comment section, pick your link, register on Deriv Synthetics or Well Trade, and then fund your account and let's roll together. Make sense? All right. Bye for now.